This is HB. Two. August 2022. Number 4B. So this is Chora Limited. Chora Limited. Statement of cash flow for the year ended that is June 2022. So start with operating activities. So in this case I've been given the statement of profit or loss. Look at the statement of profit or loss. The profit before tax was? Profit before tax? Can you see that? Yeah. 10 to 60. 10 to 60. You see that? So the first statement here. These are two statements. The first one is a profit or loss. The second one is a statement of financial position. You've seen that, the profit before tax?
Yeah.
Okay. Then we have the interest expense. Our interest expense of what? In the income statement, just before, profit before tax, 450. So they have deducted that. So we're adding it back. Interest expense. For the purpose of reclassifying it. Then we go to note number 1. Note number 1 we had what? Impairment loss. Impairment loss of what? 1.8. We add it back. We go to note number 3. Was it a gain or loss on disposal? It was a gain. Gain on disposal. Gain on disposal of PPE. We sold it for what? 33. And the net book value was, the carrying amount was 90. We get a gain of what? 210. So gain we are saying we minus. Gain we minus. Note number 4. Our depreciation for the year was? Depreciation of PPE? Yeah, 1710. That. So total, that's all that we have there. We'll give you a total of what? Cash flow before working capital. Before working capital. Yes? 2130. And you add? 12? 390. We go to working capital. Working capital. We start with inventory. Look at current assets. What happened with inventory? An increase, eh? Yeah, increase in inventory. That is 10,800 minus 6810. An increase of 3990. Now said an increase in inventory minus. Then number 2, trade receivable. It decreased, eh? Yeah, decrease. Decrease in receivable. Receivables. It decreased to what? 8220. We minus what? 97? 20. A decrease of what? 1500. So a decrease we do what? We add, because they have paid us. So it's a receipt. Then the treasury bill, we have said that's a cash what equivalent. So they shall use that later. Go to note number 2. For the current liability. Note 2. Current liability comprised the payable. What happened to the payable? Decrease or increase? Decrease. Yeah, decrease in payable. Find that decrease. To decrease to 8220. And initially it was 10,560. To decrease by what? 2340. And I've said the decrease we minus because we paid. Decrease in payable is a result of payment. So get that? Cash flow before tax?
Negative 4830.
For tax. 4830. When we minus? 12,390 minus that?
17 to 20.
17 to 20. We go to tax. You have added,
Yeah.
You get 8 or 7 what?
760.
7?
760.
7?
60.
Just that?
7560.
Okay. 7560. So we do our working for tax. Current tax. Tax. And you see current tax in note number 2? Yeah, current tax payable. We had a breakdown of 45, 90. Carry down, it's a liability, that's why we have an opening in the credit. Carry down of income statement. Income statement, tax for the year was what? Up there?
Tax expenses.
Yeah, tax expenses of 48? 860. Yeah, get what we paid. Get what we paid. Here. 77? 70. Here. 77, 70. So get the cash flow, net cash flow. Net cash flow from operating activities. Get a negative of what? 210. Go to number 2, the investing activities. We have the disposal proceeds for the plant. We sold it at what? Lot number 3. We sold it for 33. So that's what we received. Yeah, we sold it for 33. And we start with the PPE. We had a breakdown of what? PPE of 22. And carry down 7,750. And we disposed what? The disposal in lot number 3. The net book value was 30, 90. Depreciation of what? 1710. And lot number 4. We acquired some of them through a bank loan. Bank loan of
1680.
Yeah, 1680. And those are revaluation. Revaluation with debit. Look at the revaluation reserve. Revaluation increased by the revaluation surplus. And the equity
From
18 to
48.
that's an increase of 3,000. Look at the income statement up there. Other incomes and the income statement. We had the gain on of that 3,000. So here, revaluation of 3,000. Get what we acquired for cash as our balancing figure.
So the total of the debit side 26,790.
So I need on the credit.
Need the
Find that start with this. It will be easier to start getting the total of this, then you minus these 3 to get the cash.
So you mean this side is big?
Yeah, this side automatically should be big. This side you get what?
5760.
The one that we bought, 5760. Yeah, so that side is bigger. So acquisition of our PPE 5760. So you minus it is an outflow. What about the intangible? Look at the intangible. Intangible asset. We had a breakdown of 48. Carry down 87. And we had some impairment. So can you remember that in note 1?
Yeah.
Impairment of 1? 180. Remember, we are crediting impairment because it reduces the value at the beginning. It's like the way we are crediting what? The depreciation. Huh? Yeah, so balance with what we acquired. Cash. What we acquired. $48. So acquisition of intangible asset of 4080. Again, that one be minus. So balance that. The net cash flow from investing activities. Net cash flow from investing activities. 16? 65? That way? Okay, go to number 3. Financing activities. What happened to our shares? Look at equity. So this one we can look at it directly without opening an account. Issue of shares. Issue of shares. Equity, share capital. It increased by 3,000. Yeah. So that will be 15. 15 minus 12. And we add the premium. Increased by what? 10,500 minus 3. Yeah. So the total will be 10,500. Is it 10,500? Yes. Still you can open an account for that. I think that's what we shall do. Let me delete that. So 10,500 may be misleading. Remember there's a point there. So shares. So we had a breakdown. Ordinary of 12. And share premium of 3. And carry down, we had ordinary shares of 15 and share premium of 10.5. There was a note number 5. Number 5, during the year that is June, Chora Limited made one for 8 bonus issue, capitalizing its retained earnings. So here we had bonus issue. We take the value of ordinary shares at the beginning by 1/8, 1 for every 8. Because bonus normally is issued at par. 1,500. So the balance will be cash now. Balance is cash. So you get 9. Because this is 25,500. Is it 9,000? Yeah, 9,000. So issue of shares of 9. That's the money that we received cash. Because bonus, there is no change in resource, we did not receive anything for that. Dividend paid. Have we been given the dividend in this case? There is no, but we have what? The retained. We shall deal with the retained earnings. To see whether we paid the dividend. So it's on the credit, the drawdown, because it's under capital. Drawdown of 76. Carry down. Income statement. We had what? The profit for the year was? Profit for the year? 50? 54 and 400. Yeah, profit for the year. We are not using the total income because the gain on revaluation was put under the revaluation reserve. So profit for the year was 54, and we have financed this bonus of 115. When you look at note number 5, the last part, capitalizing its retained earnings. So when we have credited this account, we debit the retained. The amount that we used to finance the bonus came from the retained. So balance with the dividend that we paid. That's our balancing figure. This will be 13. 0.50. So your dividend will be 36?
46.80.
46.80. 46.80. So dividend of 46.80. 46.80 that way. Then we are remaining with what? If we are done with the equity, go to non-current. What happened to the debentures? Look at the debentures. Debentures. Is it an increase or a decrease? It increased. Yeah, issue of debenture. Debenture are loan stocks. Issue of debentures. 4.5 minus 3. So we received 1.5. What happened to bank loan? Bank loan. Let me open it here. The reason we had a breakdown of at 750, carry down, yeah, 4440, and note the opening is on the credit because it's a liability. Here we financed PPE through what? Bank loan. Here double entry, PPE of 1680. So did we acquire? Did we pay? When you add the credit,
54.30.
so we paid 54.30. 54.30. Remember we closed with 44.40, so it means we paid. We paid what? 990. The payment of bank loan. Payment of bank loan. Bank loan. 990. Okay. What else are we remaining with? Note number 2. We have the bank interest payable. Let me just do it here. The bank interest. This account are to assist you. Bank interest, it's a payable. We had a breakdown of what? 360 and carry down of 510. And we had another thing, the interest on debenture. For the debenture, we had only a carry down of what? 150. This for the debenture. Debenture interest. We just need to combine them because both of them, they are interest. Interest, we call it the finance cost. Here, income statement. We had a value of what? This one. The interest expense for the year was 450. So we paid what? And you balance that. This would be 810. So we paid 150. Interest paid or finance cost. Interest paid of 150. I think that's all. We have covered everything. So balance that. Cash flow, net cash flow. Net cash flow from financing activities. $88 positive. Cash flow for the year. Cash flow for the year. So ABC. Give your value of as your cash flow for the year. Is it that way?
Sorry.
680. Yeah. Okay. So for the year, this minus plus. We have the opening cash. Cash and cash equivalent, and the closing cash and cash equivalent. You are having negative 2070. Look at the opening. Our cash, we had what? And the cash equivalent. So we had a treasury bill of 13 1380. And cash of what? That 510. And what else? Overdraft. Note number 2. Overdraft of 1620. You get what? 1380 plus that 510 minus 1620. You get? That 270. Then the closing. We had what as our what? Bills, treasury bill of 42.90. Cash of what? 8. Is it 870? An overdraft of 39. 960. It will give you 1200. 1200. When you reconcile, negative 2070 plus 3270, 1200. Yeah, that way. So Artisan, you have a question or clarification? Ask your question.
The cash and cash equivalent.
Yeah, remember cash and cash equivalent. We have said the cash equivalent part, treasury bills, the short-term security, the 90-day, they qualify as cash equivalent or near cash because they can be converted into cash within 90 days. So it is incorporating the treasury bill, the cash and cash equivalent, and the bank overdraft. So we are minusing the overdraft to get now the net cash for that. Opening was 3270 and the closing was 1200. So when you take negative 2070 plus 3270, you'll get 1200. And that's how, again, that one is reconciling. Yes, is any clarification or any question? So this one you must remember, especially the opening balances. Yeah, but you shall do a lot of practice until you get it right. That's all.